Let's talk about the impact of US election results on gold that keeps some people up at night. How the potential election of Donald Trump could send the price of gold soaring. Certain economic principles and domino effects could come into play. Buckle up, we're diving into tariffs, high bond yields, and gold's allure. Trump's campaign promise was to reduce America's military presence. On the surface, that might sound good. Less military spending, more money for schools and hospitals, right? But it creates a power vacuum. And who might fill that void? Russia and China. Nervous investors turn to safe havens, like a certain precious metal that rhymes with mold. Trump has talked about cutting government spending. But government spending keeps the economy afloat. When US doesn't print, rest of world has to print more to service their own debts. That will lead to high taxes and inflation in all countries, and markets tank down. When the market crashes, guess what happens? Investors run for the hills, clutching their gold like it's the last helicopter. Now let's talk tariffs. Trump loves tariffs, but tariffs make things more expensive. And when things get more expensive, you get inflation and high interest rates. That leads to public shivering to pay their monthly EMIs, and then banks holding the mortgage loans start to sweat. So, to balance their balance sheet, they go to gold, the ultimate safe haven. Let's hop across the Pacific to China. China holds a lot of US dollars. If a trade war starts, China might dump dollars for something more tangible. When China buys gold, the price will go up. And then there's Japan. Japan holds a ton of US Treasury bonds. If they worry about the Japan currency fall, they might convert US bonds to dollars, then to yen, and buy gold. Now, let's swing over to India. India's economy relies heavily on foreign investment, much of it from the US. When their currency loses value and money supply shrinks, people seek stability. They turn to gold. In the US, national debt is skyrocketing. The government will raise taxes to pay for it. As the economy worsens, people turn to gold. Let's talk about oil. When the economy tanks, oil demand plummets. Investors get scared and run for the exits. Gold is a destination for those exits. Here's the thing, folks. The US is already trillions in debt. It will touch £36 trillion this month. As debt grows, it pressures the dollar. A weaker dollar means people seek alternatives. Investments like, well, you know. The US Federal Reserve could try to save the day. They could print more money, buy up all those treasury bonds. But they can buy only $10 trillion more, which would lead to more inflation. Countries will realize Fed buying is the last step to dollar collapse. And so then, you can guess what happens to gold. A perfect storm of economic uncertainty. Trade wars, national debt, and a weakening dollar. When panic grips the markets, there's one place left to turn gold. I'm not saying gold will hit $1 million an ounce. When the world loses faith in paper money, gold stands the test of time. In these uncertain times, it's the only safe haven left. Look, I'm not a financial advisor, but as far as my RAM time machine goes, we surely know we're living in unprecedented times. So, we should diversify our portfolio and consider adding more real estate in India and the shiny stuff, gold. And who knows, maybe, just maybe, gold will be your ticket to the moon.